Today, we're going to be going over the basics of scalp trading and exactly what it is. We're going to be going over the fundamentals like risk management, exactly how to find these trades, what is the best setups to play when scalp trading, just finding the opportunities and some tips and tricks at the end of the video on how to actually scalp trade consistently and be profitable with it. So now let's go over exactly what scalp trading is. So the reason why I love scalping so much is because it's such a short time frame type of trading. The 1 minute and the 5 minute is what I use the most when I'm scalp trading, and we're basically taking advantage of quick aggressive momentum moves in the market, which will pay very well. I'll get a nice move in my favor within 1 minute. I'll be up 20%, 30% trading options. And honestly, that's all I need for the day, and then you could just be done. And it's super easy to tell if you're wrong on the trade, which is why your risk to reward will be a lot higher than most trading strategies out there, because you'll hit a 1 to 3 risk to reward. So let's say you'll take a 5% stop loss. Your average gains are going to be like 10 to 15%. So that's a 1 to 3 ratio right there for your risk to reward. But the good thing about scalp trading is its win rate. It has a very high win rate since we're taking advantage of quick aggressive moves in the market, the 1 minute and the 5 minute. The best part about scalp trading is you don't need any indicators, so there is no indicators required for scalp trading. There might be other stuff that helps like the EMAs and stuff like that, but basically the less indicators the better. If you know how to use time and sales and reading the tape, that is the most important thing. It's just order flows coming in and you being able to identify that order flow coming in. The only reason why stocks move in the first place is if people are buying it or people are selling it. That's the only two ways that the stock can move. If you can analyze that raw data real time, you'll be very successful when it comes to scalp trading. So how do you read that raw data real time? Is by the time and sales, the level 2, and you can see all of everyone's orders coming together and seeing what direction is most favorable, and seeing also that momentum and that aggressive price action in one direction. What does scalp trading work on? What kind of stocks can we scalp trade on? So Tesla, SPY, anything that has some high volatility liquid contracts is going to be your best bet when it comes to scalp trading. It could be Tesla, it could be SPY. The reason why I trade SPY every single day is because I have 0 DTE every single day on SPY. Unlike Tesla, where it's 0 DTE is Friday, the contracts will move a lot better on 0 DTE, and it's also more liquid on the 0 DTE contracts. It is a little bit more risky, but the way that we scalp trade is not really that much of a difference. We're still going to take a 5% stop loss, a 3% stop loss, depending on what the price action is doing. I'm also going to go over some examples on what I'm looking for when I'm about to take a trade, and just some setups that I took and what we could learn from each and every single one. Scalping requires no hesitation. You can't hesitate. You can't be emotional, because if you start hesitating, you start being emotional, the trade will move without you, and then you're going to FOMO into it, and then you're going to get in at a very high price, and then when the price starts coming against you, you're not going to know what to do. So the reason why I love scalp trading, like I said earlier, is you'll have a nice 85 to 90% win rate depending on how well of a scalp trader you are and how much time you put into actually learning how to scalp trade, but you will have around an 85 to 90% win rate if you do it correctly. And the reason why I love scalp trading, I can make 10% in literally 30 seconds and be done on the day. You could also lose 10% in 30 seconds, but this is where the risk management comes in. Now, there is different ways that you can scalp. The way that I scalp is probably one of the most consistent ways to scalp in this market. So I'm just going to go over that. The reason why my way of scalping is super consistent is I look at reactive areas and reactive zones. Since I want to scalp a nice aggressive reaction, right? So if I'm getting inputs, I want the stock to just immediately fall. I can't make a zone off of somewhere where it just didn't do anything. I want to see a reaction at the zones that I make, so I know when I get into something that it could react the same exact way. And I'm going to show you guys that in a second. Alright, so now let's go over what I mean by reaction areas. So this was yesterday's trade. Yesterday we had a level at this 395 area, right? We could see that price was bouncing in this area. We see that price was also bouncing in this area and just kind of holding up a certain level. Now, we had an aggressive move to the downside, and then it just stopped at this random point. Now, stocks don't just stop at random points. There's obviously something there that's stopping an aggressive move to the downside. It's like stopping a train with nothing in the way. It's not possible, right? When an aggressive move like this, imagine a train just completely keep going, and then just completely stops at a certain point. How can you just stop a train like that without anything being in the way? So there was obviously something here that was stopping it. It was still holding up. Then we had a nice push, came back, retested it, another nice push, came back again, and then look where it went. It went up to high day. So there's something here. And this is what I'm talking about where a reaction, right? This is my reaction zone. There is reactions in this area. Look at what happened. Aggressive move to the downside, it stopped. Then it bounced all the way up to high day. So when it gets back in this area, I'm expecting a move in either direction. Now the way that I scalp trade is I play the breakout. So let's say we had a zone right here, you would play the breakout to the upside. If we had a zone to the downside right here, we would play it to the downside. Now, even though there is an opposite reaction here, if SPY, for example, breaks out of this reaction area, that should correlate to an aggressive selling pressure that comes in at that certain point. Since every time we bounce and we bounce and we bounce, look at this nice bounce. So if we break under this, what do you think is going to happen? You think it's just going to slow down there, just not break out? No. When we break out of that, it's going to break out. Next thing you know, look at that breakout right there. And you can know if you're wrong right away if it just doesn't go in your favor. Here's SPY's time and sales. When you correlate it with the time and sales, you can see when you should get in and when you shouldn't. If the tape is this low, you don't want to get in. The reason why we get in is because of momentum. The way you can see momentum on the time of sales is with the velocity of the tape. This thing needs to be going crazy for us to get in, because we know that other people are also getting in their positions if they're shorting it or if they're long at a certain area. The tape is the main reason why I execute the trade in the first place. Number one, you can see the momentum that came in right here on these candles. It broke out of that. We confirm the breakout with the time of sales. Once it starts holding under that area, we get our puts, and then it just goes in our favor right away. We see the momentum coming in on the time of sales. And you guys can see that it's still pretty much slow, right? There's no breakouts that's going to happen. You don't want to trade something when the momentum is slow, when the time of sales is going slow. That is your biggest indication as to whether or not you should get in the trade. Let's see if the momentum is building up in order for us to take this breakout. So let's say you retain the breakout right here. So above this area, let's say that you had a zone right here. So you could just see a bunch of sellers are still coming in at this certain point, right? So you wouldn't take the breakout. You could anticipate this based off certain key levels and stuff like that, but there is no momentum showing you to anticipate this move. And we saw a bunch of sellers coming in at this certain point, which again, this is a resistance zone, so there is going to be sellers there, but we need the buyers to overcome the sellers in order for us to make a new high in this area. Look at that, right? It broke out of the zone, but what happened? There was no momentum on that time in sales. Nothing. The speed of the tape was not there in order to break it out. It broke out, right, by a little bit, but it still closed under that because of the speed of the tape. The speed of the tape wasn't there whatsoever. And now look at it. If you try to anticipate that move, you would have got burnt. That's when you sell. So if you were playing calls on that, right, and it came up, and then it came right back under and closed under, that's where you sell. A small loss. You probably would have took a 1 or 2% loss on that depending on how long you're holding that. But the way that breakouts work is momentum will come in for that breakout and it will go. If it doesn't, you get out and then you could always re-enter. So let's say you're in this trade right now. Your stop loss would be if it just comes right back down, right? The reason why we take the breakout is because we see momentum. If the momentum stops, you're going to have to just get right out, right? The reason why we trade is super aggressive moves to either direction. If you guys ever watch my videos, you guys know as soon as we get in, the price goes right away. If it doesn't, then you know you're wrong in the trade and you just get out. So your stop loss is just coming right back in the zone. Your stop loss has been right here. 394.26. If it comes right back in the zone, and then you can start taking profits above this area, 394.35. That candle right here. And it's super important for scalp trading is to sell in the push. Like I said, 394.35 was that area that you want to start taking profits. And when above that, you start taking a good majority of the position off right there. And then your stop loss could be at break even or whatever you want it to be. But it's always a good idea to sell in the push. Now this trade, since it's literally 1 o'clock, it's slow. Usually when you play a breakout, it will have a nice move in your direction. This was literally a 10-cent move, but look at the time. It's 1 o'clock. The best times to trade is from 9:30 to 11 Eastern, because that's where the most volatility and volume come in during a trading day. So hopefully this video helped you guys out a little bit. If it did, make sure you guys like and subscribe, and I'll see you guys in the next video. Peace. Hey you, yes you. Listen, if you guys are not in my Discord chat room where I live trade every single morning, post all the zones, all the key levels, everything that I'm looking at for the day, post 3 to 5 lessons per week to teach you guys the exact strategy that I use that allows me to consistently bank on SPY every single day. That has helped thousands and thousands of students become profitable traders around the world. We got people in the UK, people in Canada, people in the United States. The best part is that you guys can join this chat room as well. All you guys have to do is click the link in the bio, or you guys can message me on Instagram if you guys have any questions. Pop it up right here, and I hope to see you guys in there. Peace.